Welcome back. You're watching IndianOpen right here on BloombergQuint Live. A quick glance across Asia. We've got positive cues coming in from Nikkei 225, which is up about 1.7% at this point. Hong Kong is marginally higher, while China trades in the red by about 0.5%. For the SGX Nifty, though, it's a positive start and a positive trade right now, 11,377. It's a 42-point bump up. Good morning, Neeraj. It looks like if we go by what the SGX is doing and what the rest of Asia as a pocket is doing, it's not doing all that badly. So can anticipate a slightly stronger start, but again, maintenance of that is important.
Yeah, I think the maintenance would be important, Devina, and also because Nikkei had a break yesterday, so starting off today with a bit of a lag, and maybe that's why it is doing what it is doing.
Also,
thumbs up to your birthday as well, Devina. Many happy returns of the day.
Thank you so much.
Yeah.
But the other point being also that crude oil prices coming off that sharply. I mean, for equity markets, nonetheless, we've sort of had our moves on the opposite direction to what crude oil has been doing. So favorable in a way.
Yeah, favorable in a way, and maybe some of the crude-linked stocks could do well today. I mean, I think off late, because of this very tight range that crude seems to be in, which is between 50 and 60 for both, it doesn't gyrate the markets too much as it does to individual stocks on open on any given day. So let's wait and watch. But yeah,
and comments from China really not helping.
Not doing favor. Yeah, true.
All right, what else has been happening in the derivative space? Agam Vakil is standing by with the futures and options update. Agam, good morning.
Good morning, Devina. Well, what we saw yesterday was a little bit of an up move. Eventually, some strength coming through, and we did see unwinding coming as far as the open interest is concerned. Decline of around 3% in open interest, and moving on as far as the Nifty banking futures are concerned, we're looking at a decline of around 4%. So there is short covering at this point in time. The India Volatility Index advancing to a certain extent by around 1.7%, about the mark of 17.4 to be precise. The Nifty put call ratio as well, while moving higher to around 1.17. In terms of options and the range that we're looking at, still 500-point range based on the maximum open interest, which remains with the 11,000 put and the 11,500 call. We did see a lot of change across several options yesterday. Of course, 11,700 call stands out considering we saw writing, and of course on the lower end, 11,000 put continues to see more accumulation and open interest. Moving on to stocks, let's take a look at Century Textiles, because this is one of those stocks which did see a lot of weakness, as was the case for SRF, and both of them did see fresh shorts building into the system. Tata Motors and Torrent Pharma, on the other hand, advancing, seeing longs. In terms of unwinding, keeping an eye on something like a Strides Pharma, an interesting move there, a very sharp up move, and unwinding coming through. So there's some bit of short covering as far as Strides Pharma is concerned. So keeping an eye on that one as well. And Container Corp is also very poised very interestingly at this point in time, at least as far as technicals are concerned. So we'll be watching out for those names as well. All in all, let's wait and watch whether or not it will be another mixed day of trade in today's day of trade.
Yeah, it'll be interesting to see what happens to Concor, for example. It's got this, it's caught in this spiral of bad news, but today it's gotten an upgrade from Hsbc. Not a big target price.
I'm more interested in knowing what Irctc will do.
Well, that's the other one, which is probably based on the current flavor, very, very important as well. So yeah. But a lot of other stocks, right? It'll be interesting to see what the crude-linked stocks do. It'll be interesting to see what some of the metal names do, simply because the last 2 days have been very good because of this positive vibe of trade talks, but now kind of dwindles away.
I think China sort of poured cold water on it last
some bit of cold water, if not entirely, yeah.
All right, let's talk about all of this and more with Mayuresh Joshi, Head of Equity Research at William O'Neill, India. He's joining us right now on the show. Mayuresh, very good morning to you. I mean, we've spoken in the past, and the setup now clearly focusing more on corporate earnings and what we do thereabouts. But individual stocks also now, in their own way, have started to see a lot of interest coming in, especially new listings. And since I'm more keen to know your thoughts on Irctc, at about 700 plus, 733 was its close yesterday. Valuation of 40 times plus now from the issue valuation of 18.5 times. Does it make sense for anyone who, or is it a complete miss the bus situation?
So morning, Devina. Morning, Neeraj. Yeah, so
morning.
First of all, wish you a very happy birthday. Just
Thank you.
Neeraj, wish you that. Specifically coming to the issue of Irctc, right? Valuations are off the table at this point of time. So I think the subscribers, the kind of response that it probably got, the response that got evinced in terms of the listing itself, very clear in terms of the price action. There are a lot of factors which actually stand in favor of IRCTC. So it's a sole distributor. So I think the moat that it probably has around its business model is going to remain very, very strong for the near foreseeable future. The second element obviously is the convenience fee, and though there is some amount of dispute on that part, I think if the convenience fee probably stays with them, I think it directly flows down through the EBITDA and the bottom line. The third element obviously is the net debt-free status. With the improvement expected in terms of new routes coming through on the railway system itself, and the expectations of internet penetration actually taking volumes far higher, you've actually got a very strong business mode surrounding it, very strong business fundamentals as far as the P&L and balance sheet are concerned, and the dividend payouts are large as well. Which brings us to the fourth point of valuations, right? And valuations are extremely, extremely pricey. But again, I think there is no direct comparable at this point of time. I think I had read a few reports before the issue was out on comparisons made with Make My Trip and so on and so forth. But I think it has some length to go to that distance, because if you probably look at our infrastructure from a railway standpoint, convenience of travel, the comfort of travel, it's not there when you probably look at international standards. So I think it's a long way to go out there. But again, I think the investors who probably got the offering, I think they're better off staying put, at least at this point of time. There was a joke moving around apparently. I think if you don't have the shares of IRCTC, apply in the Tatkal system.
Yeah, that's interesting. That's a very nice one, actually, early morning on Tuesday. Just one small bit that I want to add. And again, not an apple-to-apple comparison, but it takes me back to NBCC's listing and post the listing. No direct competitor, and a lot of talks about what happens to NBCC if the government opens the door to private competition, which is something that is being argued for IRCTC. We've seen thus far, there has not been any direct competition open, though NBCC's got a saga of its own that's separate.
Absolutely.
But no direct competition. So this whole talk about what will happen to valuations if competition comes in, I think that argument should be thrown out of the window, to be honest. Just leave that out and then try and look at the other parameters.
Yeah.
But
and in terms of internal transportation for India, I think railway is probably the backbone of the Indian transportation system, at least from a travel standpoint. While you have your cars and your buses and road transportation, but railways...
And to add to point, I think that will keep on increasing, because if you're probably looking at the urban class, they might probably go for air transport. But for the large rural diaspora at that place, I think it is one of the...
To be honest, I hear a lot of urban guys also now starting to move to rail because I think the services are showing some signs of improvement. Anyway, just the other one, Mayuresh, and something that is much larger, HUL. The volume growth numbers at the upper end of the expected band, margin improving, and the commentary didn't sound all that poor. What did you make of that, and what do you then do with the stock?
So I think, as we discussed last week as well, I think the rural growth clearly has come off. So I think that was what we were anticipating, the rural growth will come off, because the outpacing of rural growth is clearly a growth driver for all consumption-driven stocks. So that's one. The second element in terms of adjusting for Ind AS 116, I think then there is a 200 bips improvement in margins on a comparative basis. But still, that's far better than what one really expects. You're absolutely right. I think in terms of volume growth, better in terms of the context that we are hearing about in terms of slowdown and slowdown pressures, and HUL clearly has stood the test of time. But again, I think 2-3 things. One, I think rural slowdown still evident as the management is still putting forth. The second element obviously is going to be pricing, because for all these FMCG driven companies, I think it is volume led pricing growth which creates huge leverage on their balance sheets. So one of the legs is clearly missing at this point of time. Volumes are a little bit tepid, pricing still not there. So I think the clear operating leverage that one looks at, probably, as I said, might get deferred till the Rabi output probably comes out, which is fourth quarter. But nevertheless, I think the performance was quite good. They have taken a few price cuts in few categories. But again, I think introduction of a few products that have come through, strong revenue growth still continuing for the company. Again, brings us to the argument of valuations. But again, I think valuations have always been at a premium for HUL. So at least at William O'Neill, I think we try to mix fundamentals and technicals as we discussed last week. So fundamentally, I think the stock is looking very, very good from an earnings perspective, from a valuation perspective, probably a little bit higher. But from a price perspective, I think it has shown tremendous improvement. A little bit higher than our comforts, at least as pivot levels are concerned. I think we'll watch out for levels around 1875, 1880. I think it pulls back to that level and consolidates. I think it becomes a very, very good stock, and it does lie in our conviction buy list.
I want to ask you about IndusInd Bank. When it reported its numbers, I think that day when it reported numbers was a day when the bank Nifty, was down about 800 odd points. So probably a trickle effect on IndusInd Bank as well. Did you think the numbers were okay? I mean, there were some additional slippages, but the management managed to clarify a lot of things and put light on a lot of things with regards to how they've used, the savings from the corporate tax, what they've done with those stressed accounts.
So I think two elements stand here. I think one, in terms of the savings that would come through on the DTA front, were clearly going to get plowed back in terms of higher provisioning. So that was one thing that was given in terms of expected numbers, and that is probably how it is played out, at least as this part is concerned. The second element in terms of asset quality slippages per se, I think there is still some element of doubt that few of the analysts on the street probably believe might still play out in terms of balance sheet dynamics. So I think you might need to give it a quarter more to probably assume that a lot of the distress in the balance sheet has probably got recognized. By the way, the corporates are failing every alternate week, and you hear some news coming out. I think the comfort level probably still doesn't stay out unless there is a surety that probably comes through that a large part or large element has probably got recognized. In that context, I think ICICI Bank, which I've been liking for a period of time, has stood the test of time. It has done a large part of its recognition. It probably might report a reasonable set of numbers as far as Q2 is concerned and stand out within the corporate-led pack. So I think everybody's probably moving towards retail at this point of time. So again, ICICI probably still stands out if you're probably talking about the larger private sector things.
All right. Mayuresh, we'll come back to you and discuss more with you. But in the meantime, let's go across to our research team. We've got another big number getting reported today, and that's Wipro from the IT space. So all eyes out on what Wipro can do post-Infi and TCS. Some more stocks and news and some earnings that came up post-market as. Nikki, let's start off with you for some stocks and news.
Sure. I'm going to start off with Indiabulls Housing Finance, where in the board meeting yesterday, it said that it's still going to be considering the buyback option. But then first, it's going to be confirming with SEBI for the applicability of the debt to equity ratio of 6:1 before buyback announcement, and also it clarified that promoter group does not intend to participate in the share buyback. So do keep an eye out on this one. Yes Bank, where the bank has sold as much as 6.77% stake of Fortis Healthcare, and it's been selling in various tranches now from June 30 till October 14. HDFC, where the company has reduced a retail prime lending rate by 10 basis points, and Lakshmi Vilas Bank, where we're just expecting some kind of sentiment impact, if at all, where RBI has imposed penalty of around crore due to violation of RBI income recognition and asset classification norms. Jet Airways again makes it to the news. FE report suggests that Synergy Group is in talks with Bird Group to invest in Jet. Earlier, airline creditors have granted Synergy Group an extension until November 15 to finalize a resolution plan. And also last that we're looking at, and also we've extensively spoken about, IRCTC, where a Reliance mutual fund has acquired 15 lakh shares at a price of 626 per share.
All right, Nikki, thanks very much for that. Darshan, some more numbers?
Yeah, so there were two results that came out apart from HUL. One of them was GTPL Hathway. Now, numbers not purely comparable because of the EPC division that has come in. So on a total basis, revenues were up 95%. Revenues ex the EPC business was up 41%. So the media business did well for the company. Profit up 97%, EBITDA up 40%. But the margins have come in, EBITDA margins have come in lower at 20% versus 27%. And that was because of the raw material cost at the EPC business and higher other expenses at that business. But apart from it, the revenues were pretty strong. The cable business revenues were up 44%, internet revenues were up 11%, and pay channel cost was up 50% due to the tri-norm changes. As far as Delta Corp is concerned, revenues were flat at 200 crores this time around. Profit up 22%, and that was on account of lower tax this time around. Tax was at 22% versus 36% last year. EBITDA up 3% and margins pretty much flat. The online gaming revenues was up 17%, but the casino and the hospitality business did manage to disappoint this time.
All right, thanks for that, Darshan. And Wipro is the other one that we're watching out for today.
Well, it's not going to be very much like TCS and Infosys as far as Wipro is concerned for this particular quarter. We're likely to see a 0.7% uptick as far as revenues are concerned. Sequentially, we're likely to see perhaps a little bit of a contraction in EBIT margins for Wipro. Again, sequentially coming in at around 16.3%, and net profit could actually decline by around 5% quarter on quarter. We're expecting subdued revenue growth because there is is that volatility playing out as far as your financial services vertical is concerned. There is caution in Europe as far as spending goes, and IT services revenues once again in terms of your guidance as well going forward is likely to be somewhere around 0 to 2% as far as the third quarter goes. Margins could be under pressure. Why? Because in case of Wipro, there is a little bit of a lag when it comes to wage hikes. Of course, they did take wage hikes in the first quarter, but some of them did spill over in the second quarter as well. There is also the fact that premium pricing may actually come and counter to a certain extent this contraction, but on the whole, it's going to be a very quiet quarter for Wipro.
All right, guys, thanks very much for that. So we're watching out for all of those names. Mayuresh, in fact, coming to you with the IT stocks and what Infi and TCS have done, what is expected out of Wipro. Obviously, the outperformance of Infosys is reflected in the kind of outperformance in the stock price versus the TCS. But what would the play be now on IT?
So I think we still believe that if you probably stack up the top tier names and the results which have come out so far, I think TCS did disappoint in terms of all parameters. So if you're probably talking about revenue growth, when you're probably talking about EBIT margins at 24%, I think one of the lowest reported in Q2 by TCS. I think the only points which stand out for the top tier names is the order book at hand at this point, and the order book remains extremely solid for execution to probably still continue. But again, you're typically entering Q3, Q4, which are the weakest quarters for the sector as a whole. Furloughs, Christmas holidays will largely dominate Q3. Discretionary spending patterns will dominate Q4. So I think most of the elements which were missing in Q1, wage hikes, visa cost, have effectively played out in terms of Q2 numbers. But again, I think if you probably stack it up, and in our opinion, again, I think Infosys probably looks a tad bit better placed compared to the other top tier names. Obviously, the guidance that they've upped, I think that's a positive. But the second element in terms and in lieu of global slowdown, what actually happens with the BFSI sector, because that contributes 30 to 32% of the overall top line, is going to be extremely critical. So if you need to stack it up, I think it's probably Infosys that still stays on top for us.
Well, the last 3 months, Infosys has had this clear lead over TCS. Let's see if that lasts. Let's talk about some charts as well. Mayuresh, hang on, so much more to speak about. Brijesh, Bhatia, head of research at Dealmoney Securities, Johnson right now, as does Amit Harchekar, director at Index Genius Investment Advisors. Gentlemen, both of you, good morning. Thanks for joining in. You've been at the opposite ends of your calls. Amit has largely been bearish. Brijesh has largely been bullish. Is the call different today? Brijesh, let's start off with you.
No, it's not a different today. I'm continuing with my bullish scenario. And in fact, if you look at the charts now, 11,100 has played a strong support. If you look at the month of August, where it was consolidating between 11,100 to 10,700, price has been retested in the recent fall, and we have seen again a resumption of bullish journey for the Nifty. Even if you look at the 200 days average, it is quite strongly holding its 200 days average. And previously also we have seen that generally Nifty consolidates around 200 days average and resumes its upward journey. So similar scenario has been going on in the Nifty, and we think October series might test 11,600, 11,650 on the upside. And now the 11,226 on the momentum based stands out to be very, very strong support. So one can take a long bet at current point of time, keeping a stop loss of 11,226 and look for 11,600, 625 on the upside.
Amit, good morning. Are you still bearish?
Yeah. Good morning, Neeraj. In fact, what I would say, if you see the last trading activity of last 4 trading sessions, we believe Nifty has formed a bearish pennant, and the support for this bearish pennant is at 11,315. So we believe the moment 11,315 gets broken, again Nifty becomes a good shorting candidate at these levels. We are expecting a target below 11,000. Plus, if you see from a larger perspective, the Nifty 500 index is still trading below the 200 DMA. The Bank Nifty has been below 200 DMA for nearly 8 trading sessions. And in fact, in yesterday's trade, even the BSE Infotech index has closed below 200 DMA. So we believe all these parameters are indicating that the markets are poised for a major decline in the near term. In fact, if you see the BSE Infotech index, it has clearly given a breakdown from a rising wedge, and which opens a space for a 10 to 15% correction in the near term. So we believe since service sector is likely to remain under pressure in the near term, markets are likely to decline from a broader perspective. Plus, if you see the Nifty Midcap Index, the intermediate top which happened on 24th of September, it managed to retrace only 23.6% of the entire 2 years of down move. That tells you the extent of bear market we are into, that the broader market is not participating at all, and next leg of decline could be very severe. Plus, if you see from a currency angle, Chinese yuan is poised for a 3% depreciation in next few days. So we believe that will also put pressure on rupee, and I would not be surprised if USD/INR crosses beyond 72.5 in next 2 to 3 trading sessions. So overall, the view remains bearish. We are expecting Bank Nifty to slide by at least 4% in next 2 days.
All right. Pretty concrete view there on the Nifty Bank, down by 4% in the next few days as per Amit. But what about stocks, Amit? How would you trade individual counters?
Well, I would still prefer my favorite pick, which is IndianOpen Bank. As I was saying, that the stock has breached long-term triangle support, and we are expecting for a targets below 1,000 on a long-term basis. In a very short term, we believe the major supply zone for IndianOpen Bank is placed at around 1300, 1320. So we are recommending for today's trade a stop loss of 1310 on a closing basis, and we are looking for a target of 1150. Our second pick would be going short on L&T futures. We believe this entire up move from the in L&T from the lows has unfolded into a triangle. So we believe this pullback may be over at around 1485, 1500. So that's why we are recommending a stop loss of 1485. We believe the next leg of decline in Larsen & Toubro should take it towards 1280 to 1300 zone. So both these counters, since they are heavyweight in the Nifty, we believe they will be the key dragger for the markets in the coming days.
Brijesh, let's start off with the two buy calls that you have, a buy on HCL Technologies and a buy on PI Industries.
So if I just start with HCL Tech, so HCL, if you look at the Bollinger Band, it has been slightly contracting for quite some time in the range of around 1040, 1090 on the upside. And when we have seen many times if just look at the statistics in last 2 years, it has made a similar scenario for last 7 times, and every time when there is a broadening formation happening and stocks move out of the Bollinger Band, which is generally known as outside bar of the Bollinger Band, and this time it has given on the bullish side. So when these scenarios happen, stocks tend to move around 6 to 7%. And in the last trading session, yesterday's trading session, we have seen price breaking out of its Bollinger Band on the bullish side. So we are expecting that it must look for around 7-8% on the upside. So one can take a long bet at 1086, keeping a target of around 1160 on the upside, and stop loss can be placed around 1045. Second is PI Industries. If you look at the stock has given a strong breakout, sustainable move over 1300 is on cards now. And if you look at the last week volumes, it's been strongly held at the higher levels. So it clearly indicate that at higher levels also. And if you look at the mid-cap stocks, which are consistently outperforming, are on every rise of Nifty around 150 points, this stock tends to move around 5-10% upside on every mid-cap stock which are trading at all-time high. So I think PI Industries with good volumes at the higher levels indicate that still a buying stock is there. So at around 1336, one can take a long for around 1430, 1440 on the upside, and 1284 with the stop loss at current level.
A couple of mid-size or small-size financiers, Mayuresh, everybody talks about Spandana, Spurti, and we've discussed that at length. Two others, one of them was is Mass Financial that we spoke to yesterday, sounded fairly confident. The other one is Aavas Finances, which after the 3.5% up move yesterday is trading at fresh 52-week highs. Do you cover either of these two?
Yeah, so we do cover, and Aavas is something that we did like a few months back. The moment has been pretty stark, but I think there are strong numbers which are probably justifying that move as well. But does that justify valuations is a different element at all. So I think if you probably look at the core numbers itself, the AUM growth has been pretty decent. It stands around 6,600 odd crores at this point of time. The disbursements growth over the last few quarters has remained rock solid. Predominantly, the entire exposure is towards retail. Home mortgages is almost 75 odd %. Within that, again, I think the self-employed is a large structure again. And that gets clearly reflected in terms of asset quality as well. So GNP is at 0.58 for the quarter gone by, net NP is at 0.4. They've been still been resilient enough to maintain their spreads and margins as well at around 8.1. which gets reflected in a better ROA at 3.17. So you can't complain in terms of the core parameters when you compare the other HFCs at this point of time, the other NBFCs. But again, I think it comes back to those arguments of valuations versus growth. So growth clearly there, whether it will lag off in the coming few quarters, doesn't seem so from the quarter one performance. So I think absolute stellar performance as far as earnings and price both are concerned. But I think it's moved up a little bit too sharply in our opinion over the past few weeks.
What about autos, the four-wheelers, and if you have to look at it from even a standpoint of the festive season cheer, I mean, it was better than last time, but it wouldn't match up all the way.
Oh yes, and again, I think I've always maintained that stand. I still continue that stand that autos are still on a weak footing. I think the volume numbers even for September were not encouraging at all. If you look at the MHCV players, for example, I think production cuts have still got announced even in this month by Ashok Leyland, for example. The PV segment, the two-wheeler segment clearly has its impetus laid out in terms of how rural growth happens. Rural is clearly lagging at this point of time. So I think to push through volumes, at least for the festive season, discounting will come at the fore, which means they're going to take a margin hit. Volumes are not great, which means that the volume-led price growth also for auto companies are non-existent at this point of time. They can't take huge price hikes as well. So they've already done that in Q1. For example, the CBS or the ABS hikes have gone through in Q1, and that did not substantiate because volumes was clearly not there. So I think that clearly had a demarcation down in terms of the reported EBITDA numbers as well. So I think it's going to be a while till the recovery happens from an earnings standpoint. Do I preemptively play that out? I don't think so. I think let there be a couple of months sign that the numbers are actually improving, whether that happens now, in November, December, I don't want to take that call. But if those 2 months, 3 months are an encouraging sign, and even if I miss that initial rally of 10, 15%, I don't mind that because I think I've got a solid base to work with, where numbers are probably looking on the uptrend or the upswing, and there is certain amount of surety that there will be stable numbers reported in the quarters to come. So I'll wait it out even if there is a 10-15% upswing in the next few months. But the numbers have to get stable and the numbers have to be in line in what the street probably estimates. So I think I'll take my time for autos.
All right. What about pockets where you feel that it's better to just start investing now itself? What would those pockets be? If you're saying you don't want to preempt auto, if you have to make an investment, you must have had your eye on a few stocks that you like and you want to put money into. What would those stocks be?
So I think a few of these gas distribution companies look attractive. The movement has been pretty sharp, but again, I think the dynamic surrounding the entire environment probably looks very, very attractive at this point of time. The need for cleaner fuel, what has probably happened in terms of pricing. So even if gas prices move higher, they do pass it through, which means that there is a very minor pass through happening both in terms of domestic gas as well as commercial gas, and that doesn't pinch the end customers as well. But it protects the EBITDA per SCM that these companies probably report. With more and more cities probably coming for bidding, more CNG stations probably getting put out, I think the recovery of cash happens far faster than what probably one realizes. So I think IGL is something that we probably like within the CGT space.
Not Adani Gas.
I mean, we've not looked at numbers.
Okay, fair.
So I think IGL is something that we probably like at this point of time. MGL obviously has the overhang in terms of the stake sale still creating some amount of apprehension. And the other pocket that we probably like is being very selective within the mid-cap universe. So I think I'm going to discuss a 5-digit stock, which is very unlikely. But Honeywell Automation is something where our belief is that this stock can really do very well going forward. Two key triggers for that stock. I think the fuel transition from BS4 to BS6. I think 80% of the technology is something which these guys probably possess at this point of time. And even from a refining standpoint, I think the conversion from naphtha to other gases and vice versa, I think they've got the technology in place where refiners can actually make a killing in terms of optimizing their cost. New capacity is coming up at 15%. I think the new capex, these guys stand to make a killing as well. Strong earnings growth, margins have improved at 12%. Unfortunately, it's a 5-digit stock.
Well, 5-digit stocks in the past have created some serious wealth. iShare from 10,000 to 30,000, or MRF from wherever it was to 80,000. Quite spectacular. Some flashes are on your screen, by the way. Yes Bank, some numbers coming out about how they've recovered some amount by the stake of the Fortis stake. And Fortis, remember, corrected about 4.5% in trade yesterday. The interesting bit would be that it's wedged in these levels of 120 to 140. Doesn't go down too much. The point is because of all the overhangs that exist, Mayuresh, is it a stock that you would risk your money with, or are there better plays available? I don't know if you track it or no, but just a rough guesstimate.
Yeah, so used to track it. Controversy started, we dropped tracking it.
Okay.
And again, I think if you probably compare what it is doing within the healthcare space, I think the leader probably is doing far better at this point of time. So again, I think very less choices if you have a like-to-like comparison. But as you rightly pointed out, I think there are far better stocks in the market at this point of time.
And we'll talk about some of those. By the way, the two numbers that we haven't discussed, we'll talk about them post-market open, GTPL Hathway as well as Delta Corp. So that's the other one to monitor as well. Just very quickly, Brijesh, actually, we'll just come back post pre-open rates because just 40 seconds left for the pre-open rates to kickstart. And then it'll be interesting to see that while start off, if the SGX Nifty is to be believed, start off positively, can we hold on to our ground when the rest of the Asian markets, say Nikkei, haven't had the best of starts? And Europe and US won the most attractive last night. And
the recent macroeconomic data points weighing down on the currency as well. Yesterday's session saw the rupee having a sharp pullback. 71.23 was where the currency actually shut shop. So it actually opened positive and then moved towards the end of the trading session in the red. Remember, the CPI inflation at 3.99 for the month of September. So that's going to raise some amount of eyebrows out there with regards to what's happening. But aside from that, market pre-open on your screens. Nifty 50 having a positive start, muted but positive. 0.4% higher on the Sensex as well. Coming to individual stocks then, and the movers are there on the index first off. Let's take a look at the gainers. So HUL first up. Unnatural 10% move. I think that's cooled off already. 22.50, remember, is CLSA's new target price on HUL. But we'll see how this plays out. Give it some time and it'll start to come off. HUL, that's Yes Bank, is up 9% in today's session. ICICI Bank at 438. You've got Kotak Mahindra Bank 2% higher. ONGC, Tata Steel, Bajaj Finserv moves up 1%, and TCS is also up 1%. More gainers than losers, but amongst the losers, Z for some reason is showing you an unnatural 10% downtick. Maruti Suzuki is down about 3% NTPC. Bharti Infratel, Axis Bank, and Coal India are your top 5 losers on the index this morning. HUL still holding on to about 8% in terms of gains that are coming in. For the currency, I think we're at 71.27, so some more weakness that's coming into today's trade.
Wonder what the result reactions are showing. So Delta Corp and GTPL Hathway should come up. Delta's numbers maybe left a bit to be desired. I don't know if people will start questioning whether the days of the high growth era are past the company or no. But after correcting quite vehemently, the results don't inspire too much of confidence. Good numbers, nothing spectacular. GTPL Hathway numbers not comparable, but the reported numbers don't seem bad, is the point. The media business also done well. Can they surprise? Let's wait and watch. 10% now, maybe the stock will change. We'll wait. And of course, as Devina pointed out, HUL is doing what it is doing, starting off well. Just one last stock, IRCTC. We'll read the pre-open rate settle down, but just wonder if IRCTC is reacting as well, 2% higher. Mind you, HUL will not have that 9% reaction. That I can very safely say. However, we'll talk about these rates in a bit. Pre-open rates look okay for now. 0.5% for the Nifty. Let's give them a chance to stabilize. Get in Samit Sarkaru Johnson with some of the brokerage calls that you should watch out for this morning. Good morning, Samit.
Good morning, Neeraj. On the big brokerage call we have today, Hsbc on Container Corp, where the brokerage has upgraded its rating on the stock to a buy from a reduced rating and have hiked the target price to 675 from 450. Now, potential privatization is gathering momentum, and the company is already well appreciated and efficient, and this development is surprising and valuation positive, says the broker. Now, potential privatization could result into a better regulatory environment and improved pricing discipline in the industry, says the brokerage. Now, Concause services and business development activities might be improved, resulting in stable and improving market share going forward. Now, the company could be much more strategic in terminal expansion as well as business diversification, leading to lower capital expenditure intensity. Lastly, Container Corp's privatization could lead to faster consolidation in the industry and the scaling back of terminal expansion by smaller players. Now, Container Corp's volume growth has sharply decelerated over the last 4 quarters, and the market share is under pressure, but the brokerage believe that the timing is appropriate on growth prospects cyclically and as well as structurally.
Amit, thanks very much for that. Watch out for Concord then. Remember, Concord, SCI, BPCL, I think 10 days ago were a very active pocket, with no clarity coming out with the timelines for divestment now. It's somewhat quietened down. But a quick word on the charts, if you may, Amit, on any of these names, Shipping Corp, BPCL, Concord?
Well, I like Encore at these levels. In fact, the stock has given a good breakout. So any decline towards 565, I think it's a good buying opportunity. I would suggest a stop loss of 510 on a positional basis, and we are expecting an overall target towards 645 to 650 zone.
Okay, got that. A few other stocks that came out with results yesterday. You had a GTPL Hathway and you had a Delta Corp. Mayuresh, what did you make out of any of these, if you managed to have a look?
So frankly, I think as Neeraj pointed out, I think Delta's clearly gone through its phase of high growth, and it's probably lagging now at this point of time. Similarly for GTPL Hathway, I think numbers were reasonable in my opinion, but again, I think look at other stocks at this point of time.
Okay. The other pocket is the metal space. There is one theory that suggests that even if you want to look at value investing, you start looking at pockets which are cyclically weak. There's no structural weakness, but there's cyclical weakness, and at some point these companies will come out of that weakness. Do you see that happening to metals?
So let them come out. Is this as simple as that? No, the entire element surrounding these commodity-driven stocks is obviously pricing and volume growth, both, right? If you probably look at expectations this quarter, whether ferrous or non-ferrous, I think prices are down. Aluminum prices are down 2 to 4% on a year-on-year basis. Zinc prices are down almost 12% on a year-to-year basis. You look at steel prices, HRC, CRC prices have cooled off significantly. Volumes are also going to come off. So when you probably are expecting volume-led price growth, I think that is clearly going to get missed out as far as metal companies are concerned, whether it's ferrous, non-ferrous, coal companies, iron ore companies. Alumina prices, for example, are down 18% on a year-on-year basis. So there is no respite for metal companies as a whole. My entire take is that the Q3 might be relatively better because what you've probably seen in terms of iron ore prices, coking coal prices around $60 a ton. I think that might provide some respite. But whether I take a call right now, assuming the pricing environment, the demand-supply dynamics, I think it's too tough for commodity-driven companies. So again, like auto companies, I'll probably wait out. I think if the tide has to turn, I'll wait out for that tide. Even if they move 10-15%, it gives me the confidence that the worst probably might be over. And then I think taking constructive bets on the sector probably looks good. At this point, not interested in the metal story.
Okay, and maybe a fair call, let it show in the print, and then we'll think about it. There's enough to buy right now. Brijesh, some mid-cap stocks that have done well in the last few days. One of them is ITDC, which is looking like starting off higher today after a 15% up move yesterday, and some more in the previous few days, if you look at the charts here. Two, the stock of yesterday's session, arguably, aside of IRCTC, was Adani Gas, 12% up move yesterday. Do you think it can do more?
If I start with ITDC, yes, stock is breaking out of its parent formation, and it has been consolidating. If I look at from the mid of September, it has been trading in a triangle formation. And in yesterday's session, if you look at the volumes, were very much higher, and the breakout of the triangle or pennant with strong volumes, I think this momentum might continue towards 310, 320 on the ITDC. On the Adani Gas, yes, I think yes, a fresh start is there for Adani Gas, and I think a momentum, if till it's holding around 127, 132 levels, I think still a good potential upside on the Adani Gas towards 180 on the upside is still left. So I think both can be bought. Adani Gas I would buy around 135, 138 levels, considering the risk reward for 180 on the upside.
Okay. That's Adani Gas, 154 on the stock right now. Any trading play on Yes Bank, Amit, Harchekar?
Well, I have a negative view on Yes Bank because if you see the 30-day historical volatility, that has shot up beyond 150%, and that indicates this stock is likely to remain volatile even in case there is a positive news. So we have expectation that this stock is heading towards 18 to 20 rupees. The stop loss what we are suggesting to our clients on a closing basis is 48, and target will be anywhere between 18 to 22 zone from a 1 to 2 months time frame.
It's 18 to 22 in a month's time. That's an obituary written.
That's an obituary. He was negative on Yes Bank before that Rana Kapoor's stake sale happened, and the stock reacted that day because of that event, but has bounced back quite strongly as well. Let's wait and watch if that happened. I'm just but for now, Yes Bank seems to be doing okay. HUL seems to be starting off okay. We haven't done a chart check out here. Brijesh, you want to come in at 2050 at the end of the pre-open session? It's 1.7% higher. Do you think it can do more?
Yes, if you look at the long-term chart, stock has consolidating nearly 1 year in a rectangle formation, and we have seen that breakout above those levels. Price around 1900 we retested. We made a low of around 1927, 1930, and we have seen the journey resuming. If I just look at historically also, actually generally a tendency of consolidating for 1 year and rallying for another 6-7 months. I think still a more upside. We are targeting around 20 to 30, and we have recommended to clients also to buy this trade.
Okay, we're minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Hindustan Unilever reports a volume growth of 5% in the second quarter, in line with the higher end of the analyst estimates. Lower tax expenses boost the bottom line.
Delta Corp sees revenues remain flat, but profit rises 22.7% year-on-year. GTPL Hathway sees robust 95% growth in revenues upon inclusion of earnings from the EPC business.
Wipro will be the only Nifty company reporting numbers today. It's likely to remain a subdued quarter for the IT major. Expect the company to guide for a 0 to 2% revenue growth in constant currency terms for the next quarter.
Hsbc upgrades Container Corp to buy from reduce, hiking the price target to 675 rupees per share from 450 rupees per share as potential of privatization gathers momentum.
Zee Entertainment will be in focus as BTB Capital acquires the right for direct disposal of 10.7% stake held by the promoter entity SL Media Ventures.
Stocks down about 2.5%. Lastly, in key bulk deals, Yes Bank sells 40.5 lakh shares in Fortis Healthcare at 626 rupees per share.
Well, we'll watch out for some of these names. Mayuresh, these divestment names, and I think we spoke briefly, but fundamentally, a BPCL or a Shipping Corporation of India, you never know when this story might play out, but would you still go out and bet on any of them?
No, so I think let it play out. And again, I think as we were discussing right now, I think for BPCL in general, I think what kind of valuations get ascribed are going to be extremely critical, because if you take a precedence of how the SR Oil deal had happened with Rosneft, I think SR Oil at 20 MT, 1,000 megawatt captive power with 3,500 retailing stations. BPCL has got around 35 MT. 15,000 retailing stations. So I think the moat clearly is there, because 1/4 of the retailing outlets stay with BPCL. The pipeline valuations are also getting ascribed as far as the downstream products are concerned. They are variable in terms of how crude prices move. So I think there is a lot of EV/EBITDA ascriptions that can probably happen across their businesses. But what value probably gets ascribed, if you probably compare the SR valuations, which was quite a while away at this point of time, I think if they're able to privatize that, I think the government will get a lofty, share. But then again, I think there should be an open offer coming through. So I think the buyer is actually looking at anywhere northwards of 80,000-90,000 odd crores. In market conditions like these, I don't know whether the buyer will come through with that entire amount at its disposal. So that, I think, in terms of valuations need to get watch out. For Shipping Corporation in general, I think with spot rates having zoomed off and a couple of ships being deployed, as per our channel checks, I think maybe these quarters numbers or the next might actually reflect, because they might actually make a killing in terms of the spot cargo tankers, which were hovering $20,000-$30,000 per day, have actually zoomed up to around a lakh 25,000 a day. So I think some of these operators can actually make a killing based on the short-term movements that the tanker rates have to offer.
It's just a forward that was circulated yesterday with regards to how the NBFC market cap has moved in the last 1.5 years. And to say that 8,60,000 crores was the total market cap of about 28 NBFCs, which has stayed 8,60,000 crores, but the variables in between have just totally skewed themselves towards an HDFC Bank, Cholamandalam, Bajaj Finance, Muthoot Finance, 4 or 5 names out of 28 names that have managed to keep market cap levels at the same point. Do you feel that this is the pocket that's going to continue to charge further ahead?
So NBFCs have clearly got hit because the liquidity concerns which were plaguing the entire industry few quarters played out detrimentally to the sector as a whole. Secondly, I think the borrowing was still not coming through. So the borrowing cost has obviously improved. The better rated NBFCs obviously got a reasonable amount of borrowing still coming through. The AAA bonds had no issues at all because they were borrowing from the bond market itself. The low rated paper or the low rated NBFCs had huge issues in terms of borrowing, which had a huge spike in borrowing cost and contraction in spreads, along with the loan growth probably not moving at the pace one desired. So I think this double whammy probably played out on numbers. The better rated, the better quality NBFCs have stood the test of time, reflected by reasonable advances growth, asset quality pressures remaining stable. And though a marginal hit has been taken on their NIMs and spreads, the sustainability still remains with the better quality names. So our philosophy still remains the same, I think, stay with better quality names through volatile times specifically that we are probably witnessing at this point. No point in chasing stocks where valuations have come off, just with the argument that they're probably looking cheap at this point of time. Cheap can even become cheaper.
Cheaper, for sure. On that note, Mayuresh, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time.
Thank you.
30 seconds left for the markets to kickstart trade. Quick opening thoughts or quick top call from our experts. Brijesh, to you first. Your top call for the day.
I think I will stay with the buy on PI industries.
All right. Amit, what about you?
I would short SBI with a stop loss of 265, target 235.
Short SBI, buy a PI, and their calls are in line with what their index calls are as well. Stay on, Jamal. We've just taken quick opening thoughts from you post-market open, but the markets are expected to start off marginally in the green. Don't quite know what to make of this. The Bank Nifty may have a 0.25% uptake, but let's see if that lasts. Here's how they're starting off this Tuesday morning. Flattish, except for the Bank Nifty, which is 0.33%. But let's wait and watch. Even that's coming off from the opening highs. So let's give them a chance to stabilize. The Nifty just about getting ready to break into the red, by the way. Just 5 points into the green. The Sensex about 45 points, so nothing too dramatic. What about the mid-cap and the small-cap indices? Those should come up on your screen as well. Flattish for both the mid-cap and the small-cap indices as well. So nothing too dramatic for the indices themselves. On start, on open, Yes Bank starts off 2% higher. ONGC, the big mover from yesterday's session, was up 5% yesterday, up 1.7% today. HUL about 1.25% on the back of its numbers. BPCL, IOC, remember we spoke in the morning about how the crude link names could do well, and they are certainly doing well. Britannia about 1% higher. Tech Mahindra marginally higher, but yeah, that's about it. Nothing too dramatic. What's not doing well? Infosys, another 2.5% gone. So all the gains of the last few days have, at least of Friday, completely wiped off. There is weakness in Bhatia in the session today. Infratel 2 starts up about 1%, Z about 1% lower. And aside of that, not too many big movers. Just a couple of pockets that I want to highlight then, therefore, within the broader end of the spectrum as well. Stocks which have been doing well, or some result reactions that we've likely to see today. So near 52-week highs, okay, unchanged rates. Avas marginally higher. Let's get the stocks which are reacting or might be reacting to the number, which is Delta Corp as well as GTPL Hathway. Delta 2.5% lower, GTPL 3.5% higher. Devina, what are you spotting?
ITDC, the one that was active in yesterday's session, double-digit gains yesterday, continues in today's trade as well. Stocks up about 7.5%. Hathway Cables is the other one, about 5% higher. You've got the likes of an Adani Transmission, which is up about 5% right now, and should also look at Adani Enterprise and Adani Gas, both of them of which were active in yesterday's session on the back of the news. Adani Enterprises is up about 0.5%. Gas is up about 2%. Group Finance, that's up about 2.6%. Container Corp, upgrade that's come in, the stock's up 2.3%. Fortis Healthcare has moved up 2% as well. You've got Irctc, yesterday's session did well in this in trade, about 1.7% in today's session. Then you've got the likes of Vakrangi, Colgate, Bharat Electronics, all of these names are doing okay for themselves. Dish TV is up about 1% in the session. KEC International and Engineers India, both of them doing okay too. What's not doing well? Indiabulls Ventures is down 8%. Indiabulls Housing is down 6.5%. So remember that pushback, or the waiting for the SEBI clearance to go ahead and announce the buyback probably is the reason why you're seeing the kind of reaction on these names. Lakshmi Vilas Bank also suffers about 5% lower. HDIL, RBL Bank, Century Textile, Orient Cement are some of the other losers. And Snowman Logistics, which was up about 15-16% yesterday, is down in the session by about 3.5%. However, breadth of the market positive. 583 stocks have advanced. 387 stocks are in the red.
Amit, Harchekar, would you come in on ONGC? Up about 5% yesterday, up 1.5% today. Can it do more?
Yeah, absolutely. I think this stock has a good potential to go towards the 148 to 150 zone. For one reason, internationally the Brent crude prices are bottoming out, and we are expecting a surge of at least 10 to 15% there. So I think ONGC should get benefit out of it, and we can easily expect levels beyond 145 from 1 to 2 weeks perspective.
Okay, the other one, Brijesh, which is not doing well the last 2 days, is Infosys. After the 3% downtick yesterday, another couple of percentage points at 771, close to some support levels, or would you reckon it can go further?
No, I think what TCS has done, I think similar might see with Impulse also after a slide down. I think 758, 59 is the level I'm eyeing. Might taste and that I would take a long bet on Infosys, but definitely a buy on dip strategy would be a good on Infosys. Till it is not trading 742, I think positional trend might not change for NP, and all possibility that 850 can be on cards for Infosys in coming months.
Yeah, man, we'll leave it at that. Thanks so much for joining in today, Brijesh as well as Amit. Appreciate your time. Just before we get into our next big market voice, watch out for the Indiabulls group stocks. So Indiabulls Ventures, Indiabulls Housing Finance, both of them are down in the session today. And RBL Bank is sub 250 rupees per share, 247 currently. Tells you a story, doesn't it? All the weaker hands keep on getting weaker, the stronger ones keep on getting stronger, and that should only augur well for the portfolio of Marcellus Investment Managers, because I believe that's squarely where they are positioned. Pramod Gubbi, founder, Johnson right now. Pramod, you must be smiling your way to the bank and to all your clients, because somehow that theme just continues. The market is just extremely low on confidence when it comes to any of the sketchy names.
Indeed, I think we are in that phase of the market cycle where typically you see some sort of a bit of cleansing out of sorts.
Yeah,
I think it's a timely reminder for the markets that governance should be right up there in terms of the criteria that you use to choose stocks, because in the long run it has a material impact on the sort of returns that you can get, and no amount of compromise can be justified based on valuation and pricing. So given our philosophy that's pretty much the first line of defense for us, we have a proprietary forensic accounting model which works as a proxy for governance and the promoter's integrity, and as a result we need to try and eliminate as much risk emanating from that aspect of investing right at the outset. It doesn't matter how great the business looks from the outside. If we're not comfortable, we're happy to stay away.
Okay, let me try and pose at least one question. What's got the fancy of select people right off late are some of the PSU names. Now, I don't know whether it's got to do with the subscription that Irctc received or otherwise, but that's the area, the PSUs, where you can argue on both sides that one, the governance is good because it's sovereign in that sense, but two, the governance will never be good because you never know when the government comes in and chips in. Do you look at this pocket at all? Have you looked at the valuations or the business models of any of the PSU names which have attractive models, but well, because owned by the government, a lot of people just shun them away?
Yeah, it would probably be in the latter basket. Okay. because of the the ownership. We tend to stay away because often I think any government, irrespective of political party, tends to sort of confuse these companies as sort of publicly held companies versus sort of departments of governments used to do or rather offer public services. So as a result, the profit motive is certainly not consistent. So it's very difficult to make a long-term call on many of these companies, and we prefer to stay away rather than trying to sort of pick out one of these who could be different.
What do you make out of telecom, and now that the step that Jio has taken with regards to the IUC and transferring that to customers as an indirect tariff hike? Do you feel that this would, in a way, prompt others to start doing the same, and therefore is a stepping stone or towards slightly higher ARPUs and getting customers to come in at high rates?
No, quite possible actually. I think we have seen the beginnings of consolidation here. I guess there isn't too many left anyways. Even the few left are in pretty bad shape as far as balance sheet is concerned. We've also heard about the two government entities being either privatized or looking at other solutions, which means that consolidation will only improve in the sector. So that should normally augur well for tariffs and ARPUs. But does that make telecom a sector to look at more from an attractive investment perspective? I don't think so. At least from our perspective, we would rather wait and see how things pan out. Because
the doubt is what, on rates, or is it because of the indebtedness of these companies, or?
Partly, but also it is a capex heavy sector. Remember, even if you were to somehow fix your balance sheet issues, pricing comes back, you then be lined up to spend another tens of billions on 5G and next round of
which they are saying that could happen this year itself.
Well, I don't think with the current balance sheets, I don't think any of them are in a position to do a 5G rollout or bidding for any extra spectrum. So that's the point, really, because as a product or a service, there's hardly any differentiation, right? It's the same voice and the same data that you get access to.
But there's a moat.
The moat in the form of licenses, to the extent
and the op-lev is high.
Well, I think there is also a question of changing business models here. So earlier, tariffs were pretty much the only way you could monetize your investments, either in the network or in the spectrums. Now, I think people are thinking, can I overlay a set of services on top of that, and hence own the consumer, get access to data, use that data to deliver more services, and use that as a monetization ground. And that seems to be the long-term play. So in the interim, it is not clear whether any of these guys will actually justify increasing tariffs immediately and boosting ARPUs. So unless and until business models don't settle down, I think we're happy to stay on the sidelines.
Yeah. Would you, while you spoke about the PSUs, PSU banks in particular, I mean, with the FM making all the kind of announcements that she has been. Yesterday also she was talking about, transmission within the banking space, and especially to MSMEs, bill discounting and things like that. Would you believe that PSU banks, and when we talk PSU, we only think SBI, but there is a scope for the others?
Well, again, just like the other PSUs, because of the government ownership, often the agenda tends to get muddled. Are you, running the bank to maximize shareholder value, or are you delivering public goods and services on behalf of the government? So unless that's clear, which is why we've been arguing for governance reforms in PSU banks. I think there's been several committees over the years who have recommended how should you incentivize management teams so that they start delivering value to shareholders and the board. I don't think much has been implemented. There were a couple of sort of experiments of sort through Bank of Baroda, and we have seen some positive changes as a result of that. But unless and until it becomes part of PSU managements, both in terms of hiring, training, incentivizing, more importantly, I don't think you can separate the two agenda items of the government as far as running the PSU banking sector is concerned.
It was an interesting observation that was pointed out that for Bajaj Finance, all the bankers to Bajaj Finance are only PSU banks. Right. They don't have any private sector banks. So Central Bank of India, State Bank of India, IDBI Bank, Syndicate Bank, Bank of India. So, interesting to see that they're bankable enough. I guess.
but markets don't like them. Markets somehow like the player who is taking the money from them.
Banking with them.
And banking with them and not really the bank.
But consumption is a story. We've been seeing HUL numbers, not bad, so to speak. Rural demand still a bit sluggish. Rains are out of the way now. We've got inflation also that's come in. CPI inflation at almost 4% now. Yeah. How do these dynamics play out for consumption?
And if I can just add to that, does HUL's commentary give you any indication about what could happen to some of the allied sectors?
Well, I think there's no doubt we are in the middle of a slowdown. I think it will take a few more quarters for things to recover. It also depends on some of the other action that the government might take in the coming few weeks and months. Because consumption alone cannot sustain, as we have discussed in the past. We need an investment cycle to come up. I think the corporate tax rates cut are a good starting point. You need to follow that up with a couple of other things, be it land reforms, and more importantly, fixing the financial system. That's what can take the investment cycle. And once the investment cycle starts, I think there will be trickle-down effects in terms of job creation, income generation, and consumption as well. I don't think we need to worry if that happens. But in the interim, I think it will remain sluggish. We've got reports about rural employment unemployment going up. So I don't think rural consumption has got any tailwind. Yes, monsoons have been decent. Hopefully after this, the next crop, you should see food inflation also coming off. But I don't think we can expect double-digit volume growth from the likes of an HUL anytime soon. So to that extent, I think we need to see that in context.
Isn't it such a interesting thing that while you have the Amazon sale and people buying scores of electronics, spending on white goods, and people not ready to buy a 5 rupee biscuit pack, do you buy that?
I think it's also a question of penetration, right? So these have been staples, to the extent that staples, it's not like they've always been on a 25-30% growth run rate, nor are they declining massively. There's a moderation in growth, whereas these are very significantly under-penetrated categories, particularly the consumer electronics category, and in turn there has been a push in the form of both the e-commerce guys and the financiers. There is plenty of growth in consumer credit. Historically, India has been under-penetrated on that. So you've got a double push, which is sort of counter-cyclical. It sort of remains immune to the cycle, at least for the time being. How long it'll last, we don't know. So the push from credit and discounted retailers is keeping that demand up. But at some stage, I think you will have to justify that credit growth through income generation, ability of the Indian households to be able to service that debt. Are we there yet? I don't think so. I think there's a little bit more runway in terms of further increase in credit penetration for Indian consumers.
Well, one more step that has been taken. It's somewhere in Powai, a company called healthfin.in, which has put out this advertisement which is saying, avail any medical treatment, 0% interest, EMI options available. So now EMI is available for groceries, that we know on the Bajaj Finance site, but EMI options available for health treatments as well. And that's the interesting bit. Pramod, my final question. Would you stick to the tried and tested expensive names which probably dominate a large portion of your portfolio, or are you looking to swap some for cheaper names wherein there might be some doubts, but the valuations are just so attractive that they give you some comfort?
No, at this stage, our portfolio is fairly stable. We're always working on new names. There are at least a dozen of them who are on the radar, but that doesn't mean that we're actively looking to change any of our existing portfolio. I think the criteria will remain the same. We will always look for clean companies when it comes to accounting and governance. We look for companies whose products and services are generally in demand, where demand is secular in nature, they're not depend on what's happening in the external market. And thirdly, we look for companies which have a fairly strong competitive position that even at times of economic stress like this, they can continue to grow by simply taking market share of the weaker guys who fall by the wayside. I think those three will remain the core of stock selection. Valuation, while on the PE basis it might look expensive, we don't think PE is the right measure for valuing companies which can grow at healthy rates for long periods of time with very low volatility. PE at best captures next year's earnings. Companies can grow at 15-20% for 20 years with very little volatility, and simply from our perspective, most of our companies, in fact all the companies in our portfolio, are trading significantly below their intrinsic values with a reasonable degree of margin of safety, and that's what matters to us.
So stay put, I guess, is what Pramod Gubbi is saying, at least with their portfolio. You've done very well, Pramod. Keep that up, and thanks for joining in today and giving us your thoughts. Appreciate your time.
You're welcome.
Thank you.
Need to slip into a break on the note that the markets are marginally in the green, about 0.25%, which is probably not a bad sign as well. But we're talking about volume growths and crop prices, and we'll talk about that in great detail with somebody who's a big expert on that. Abhijit Sen Johnson to talk about all of that, and then see how DLF's new launches are faring in the festive season. Akash Ori, the ED of Marketing and Sales of DLF Johnson, post that.